I've been working in the wealth management and financial advice space for over 5 years, and there's one major expense that I always try to get my clients to knock out if it makes sense for them before they retire. Now, look, I don't know you, I don't know your financial situation. This is a mass kind of piece of advice. So honestly, I don't even feel comfortable calling it advice. It's not advice. This is just something that I've seen with my clients, and maybe it's applicable to you, maybe it's not applicable to you. You're going to have to figure that out with an advisor or with your own strategy. But the biggest thing going into retirement is that you don't want to have these large recurring expenses. And the one that comes to mind the most often is a mortgage. If you can knock out your mortgage and pay off your house before you retire, it's going to drastically bring down your expenses. And it's kind of a lot easier to just hold on to your money when you're not paying thousands of dollars a month towards a house, in my experience working with clients. Now, look, it may not make sense for you. It may be that you can't pay off the mortgage yet, or maybe there's a specific reason that you're trying to strategically draw out your mortgage. I don't know. I don't know your situation, but I do know that a lot of retirees struggle if they run out of money and they have to scramble and sometimes do government housing or get some help from their family. Or even I've seen people trying to enter back into the labor market because they didn't actually strategically plan for retirement. This is not what you want to do, okay? You want to be strategic. You want to back on your expenses. And if you can, if it makes sense, I would knock out that mortgage. Second thing that's kind of simple that also I see a lot of people just leaving money on the table is that a lot of retirees will have a couple years worth of expenses in cash just sitting at their bank. And with a 5-minute phone call to the bank, you can see, hey, are there any higher yield accounts that I can put that money in that will just give me a couple $1,000s a year versus next to nothing? And literally with a 5-minute phone call, you can switch the accounts at the bank that you're holding that cash at, and even a 1% difference in a rate can be massive over multiple years with a significant amount of money. So that's just free money. Like, that's what I call free money, is just calling your bank and seeing, hey, what accounts do you have available? Look, it's probably something you want to talk to an advisor about, or at least get a second opinion on. Doing these things, kind of shooting at the hip and or shooting from the hip, it can be a little bit fun and exciting, but it's also dangerous because the last thing you want to do is run out of money in retirement or leave tens of thousands of dollars on the table because you didn't realize that you could just shift your money into a different bank account without any more risk exposure, and you're getting passively $1,000, $2,000 a month. These things actually matter. If you're looking to work with an advisor, you can read every single word in the description of this video. Maybe we're a good fit to do business, maybe not, but just read every single word in the description and keep in mind that this is not financial advice to you. I don't know your specific situation. It's just something that I've seen with some of my clients. I try to get retirees to make sure that they paid off their house, because if you can cut down your recurring expenses next to nothing, then it's a lot easier to kind of plan out how much money you're going to spend, how much money you need, and realistically how much longer you're going to live. And it makes retirement a whole lot easier. Read every single word in the description of this video, and I'll see you in the next video. Have a good one.